You're listening to the Learn Like a CPA podcast, where we talk about all things real estate, tax strategy, and personal finance. Whether you're a real estate investor looking to scale your portfolio, or you're an individual wanting to take your financial freedom journey to the next level, this is a podcast for you. Hey everyone, before we get into the podcast today, I want to tell you about a brand new educational opportunity that I'm offering. Coming up in February, I'm releasing a comprehensive tax course for short-term rental investors. This course is designed to teach you everything you need to know to make confident tax decisions that will save you hundreds of thousands of dollars over the course of your investing journey. Listeners of the Learn Like a CPA show can use the promo code PODCAST20 to receive 20% off of the course. To learn more, go to the link in my show notes and you can sign up for the pre-launch. There you will be notified when the course drops. And now let's get into the show. Hey guys, welcome back to the show. Today I had the opportunity to interview John from Johnny Finance. John is a full-time content creator in the finance space. He's a financial coach, and he's also an investor himself. In our conversation today, we talked about John's beginning as an accountant throughout college and even through the first couple of years of his career. We talked about how he migrated into becoming a full-time content creator because of the need for that product in the space. There is all this information out there within finance, and needing to know what applies to your situation and what doesn't is what John will specialize in. We talked about house hacking. We talked about various tax strategies that you can use in your business. And we also talked about what we're most interested in coming up on 2023. So without further ado, we're going to jump into the podcast. I hope you guys enjoy the episode. Welcome everyone. Special day today. We are taking the time to interview and talk to Johnny Finance. So that's at Johnny Finance on Instagram, TikTok, Twitter. Where else are you at, John? You're everywhere, right?
YouTube, LinkedIn, all the platforms. You know, so.
And let's get a little bit of an introduction. So I was kind of really curious, like, obviously we're both still fairly young, and what did you do in like your previous life before you got into full-time content creation and sort of finance coach? What did you do in your previous life to what you're doing now?
Yeah, I mean, I can take you back to when I was like back in high school. I kind of grew up in a middle-class household. We never really talked about money, but it was kind of the just traditional, like my parents both worked. But I always describe myself as always having the entrepreneurial bug. So I made custom socks when I was in high school and would sell those to some of my classmates. I would do the classic, like buy packs of gum for $1 and sell them for $2. So I always had this kind of career-oriented entrepreneurship and even creative mind growing up. Like my best friend and I, we had a YouTube channel together that we made videos on for like 2 or 3 years. Like it never took off, but it was just something that, flexed our creative outlet. So that's how I describe myself growing up. I was like always curious. I always wanted to kind of create and build things. And even to this day, it's funny. My friends know that I don't like watching movies. Like I don't like sitting down and watching a movie because I just get so antsy. I want to go up and do something and build something or create something. So I don't have the time to sit down for 2 hours and watch a movie. So that's just kind of like how I am. But so going into college, I had that business mindset, and I knew if I wanted to create a business in the future, I would have to understand like money and know like cash flows and all that. So I decided to go with a finance major in college. I definitely don't regret my college major at all. I think it was very beneficial to helping me understand the concepts of accounting and financial modeling and things like that. But I realized like they didn't really teach the personal finance of things. They didn't teach me how to get my first credit card or how to start a Roth IRA or anything like that. So I kind of saw the gap of financial education that, if people aren't being taught personal finance, if finance majors aren't being taught personal finance, no one else is being taught this sort of stuff. So I saw the gap in education, and I wanted to fill that gap. And me being that creative mindset, I was like, oh, let's just start making some videos or blog posts about personal finance and financial independence. And that's kind of how I got started into content creation. I eventually got onto TikTok and started posting personal finance TikToks, and that's kind of how I blew up from there. But as I was posting, I know you asked about kind of my personal life before content creation. I was like, I graduated college with the finance major. I was an accountant for probably like 2.5 years, but I wasn't a CPA. It was more just like auditing and bookkeeping and things like that. So that's what I was after college. And then 2.5 years out of college, my TikTok had taken off since then, and I became a full-time content creator. So that's kind of my background and whole story. We can definitely touch on anything that you're interested in from there.
Yeah, I definitely do. So I also have an accounting and finance degree, and I had the same realization as you. Even taking the accounting and the finance classes, they didn't really emphasize, again, how to open up, how to establish credit and how to open up a Roth IRA, and just really hammer that time value of money to say, hey, look, if you're that 25-year-old something and you can get out of debt relatively quickly and you invest your couple $100s a month into an index fund, you can amass a good amount of wealth just by doing that. One of the things you mentioned, though, early on was how taboo talking about money was at the dinner table or with your family. And so one of the things I want to ask is, in your opinion, how detrimental is that, of just the idea that money is taboo with our family, our friends, our partners? How detrimental do you think that is to wealth building in general?
Yeah, well, I think if you don't talk about a certain topic, like, people just aren't going to learn about it. And so, and that is a thing in today's society, is like money is a taboo topic. People are willing to talk about sex more than money, how much they make. And so I feel like if we're not talking about these concepts, no one's really learning about it. Like, no one, like, even through salary transparency, like, people don't talk about their salaries, and then no one knows how much they should be getting paid. And people are, traditionally underpaid in certain industries. So I think it is extremely detrimental that, we're not having these conversations. And that's what you and me are trying to, speak up for. We want to have these money conversations with our kids, like in the households, or with our friends, hanging out, or with our family members at Thanksgiving dinner. We want to have these conversations so people can, like, be open to asking questions. And because that's how you learn. If you're not talking about it, you're not going to ask questions, you're not going to learn. And I think that's what's kept people from building wealth for so long, is they just don't talk about it and we don't learn about it.
Yeah, I've always had that similar thought of, hey, if the schools aren't teaching it, then it's really up to our parents to teach us how to manage money, how to handle money. And if our parents aren't good stewards of money, well, what does that mean for us if they're supposed to be the ones that are supposed to be responsible for teaching it to us? We're never going to learn it. Another thing you had mentioned too is money is such a taboo topic, even with our friends, that people won't realize that they're actually being underpaid. And I've had that experience with some of my friends where it's like, especially with the nurses and maybe even some of the accountant fields, where it's, hey, there's nurses over here making $24, $25 an hour thinking that's the standard, but there's also nurses with similar background and experience that might be making $35 or $40 an hour, and they just don't know that because they're not sharing their salary.
Yeah, absolutely. I think it's important to be transparent with people. And I think luckily, like TikTok and YouTube, like, some of these concepts are bringing light, or shedding light to some of these concepts, because I don't know if you've seen, like, Salary Transparent Street, or when people are going up to people on the street saying, hey, how much do you make? Or, hey, how much do you have in your bank account? I think these conversations and are what people need to know. And those videos are going viral too. So I think that's why there's a thirst for it. There's just a lack of educators in the space. And again, that's what you and I are trying to do, is just create more financial literacy and transparency throughout the entire industry. So
what does your current life look like post, now that you're out of the corporate America W-2, and what are you doing now that helps other people?
Yeah. So I was, like I said, I was an accountant for about a year and a half out of college. And while I was doing that, I was also making TikToks. And so I didn't even make my first dollar from TikTok for like 18 months. I was just posting, consistently for free. And I was enjoying doing that. And I still enjoy doing it. But now I've learned how to kind of like monetize it and get sponsorships and affiliates, and, maybe create digital products that people can find useful. So now I am a full-time content creator through those monetization strategies. And from there, I mean, I went full-time content creator in May of 2021. And from there, I've just learned so much as an entrepreneur that, systems are everything, and you need a good team behind you, and you can't do everything yourself. And so I'm really trying to build a team and build systems that can help spread the message of financial education to an even larger audience, because there's only so much I can do. There's only so much that TikTok can do. Obviously my videos can be seen by millions of people, but if I don't have the right team and systems in place, then it's capping me at a glass ceiling. So that's what I'm like learning and fighting through right now.
So what are some of those processes and systems that you like to use in your business that makes your life easier? So I know one for me, I'll say, is Calendly. So Calendly is this app that you can set your availability, set your hours, and send it to somebody to say, hey, John, here's the hours that I'm available this week. Go ahead and book a meeting. But even more so, it'll also send out automated emails and follow-ups and discussions. And even if you're going to do one-on-one consulting, you can actually collect payment through Calendly. So that's one thing that's been a game changer for me. I can't even explain how many hours that's probably saved me per year. And for the cost of like $100, it is so much worth it for me. They should be sponsoring me for saying this, but they're not. But that's just how much I love the product. Is there a product or is there a service that you love, you can't live without?
Yeah, no, I echo that with you, man. Calendly has been such a game changer. And when you think about just all the weight that it carries, I mean, think about like to have someone to schedule your meetings and then send follow-up emails and even collect payments, like you would have to pay almost a full-time admin to do that stuff. And then Calendly is only like you said, maybe $100 a year. It's like $7 a month or something crazy like that. So I completely echo that Calendly is such a game changer. And there's so much software coming out that does, replace a traditional maybe admin or a virtual assistant or things like that. One of the systems and softwares that I use that I really love is Notion. They don't sponsor me either, but Notion has been just a game changer for cataloging and organizing my content. And even it can go even deeper than that. It can organize like my whole life. And so, I have my calendar on it. I have my systems. I have my, process documentation for all the all the systems that I run through that. So I wish I could show you my whole Notion board, or I could show the audience my whole Notion board, because it's super advanced, but it just makes my life so much easier because it takes a lot of weight off of like thinking through my content and thinking through my vision of where I want to take this, financial education. Just the fact that I want to, spread the financial education, as far as possible. So Notion has been a big one for me.
Yeah, let's take a step back because I want to ask, what are your current offerings for products? So you had mentioned that you have sponsors for TikTok and Instagram, and you have some e-products. Do you do any one-on-one coaching or mentoring or mastermind groups? Can you explain a little bit more about what sort of products or services that you offer?
Yeah, I think I've tried a lot of products and services, and I think each product and service works different for different people. So for me personally, I used to offer one-on-one meetings, and I charge an hourly rate for that. But for me, it didn't really make sense because, I would spend 30 minutes before prepping for the meeting. I would spend an hour in the meeting and then 30 minutes like kind of post-meeting. So it was taking up a lot of my time. And I thought that if I could just make a video on this concept that we talked about, thousands and hundreds of thousands of people could see it. And I think that's more beneficial to the general population than just doing a one-on-one meeting. So I ended up stopping doing one-on-one meetings because I'd rather create a video and have a lot more people view it. I've done ebooks. I offered ebooks for like financial independence and just starting out. That it doesn't produce a lot of income, but I think it's beneficial for the audience. Something that I'm definitely looking forward or looking into potentially is creating some sort of like templates for people to download, like free templates or maybe budgeting, sheets or something like that, where I can create, an Excel sheet that people can budget or track their net worth or whatever, a calculator or some sort of like that. So I think doing that is a great, benefit for both parties as well. But I haven't haven't dove too deep into the digital product space just because I've been so focused on my content. I feel like content is what drives the machine forward. So if I can just like make banger, like stellar content, I think the products will eventually come in the future. But that's why I'm just focusing on mostly content right now.
Yeah, and one of the things I kind of wanted to go back to is we're both really interested in real estate, and I know we both kind of have similar backgrounds in how we got started. So one of the concepts I wanted you to break down today is house hacking, and how, middle 20-something-year-olds can use house hacking as their venture into home ownership, as well as their first time being a landlord and a real estate investor. Because one of the things that I've dealt with in local churches and just overall wealth building in general is a lot of like lower and middle income class families, the way that they're actually able to build and save wealth is through home ownership and being able to pass and transfer down home ownership. Can you explain how you got started in house hacking and kind of what that looks like now?
Yeah, for those of you who don't know, house hacking is basically when you purchase a property, either a multi-unit property or a house with multiple bedrooms. You live in one of the rooms or one of the units, and then you rent out the other room or unit. So what I did with my first house, I bought a duplex here in Cincinnati, Ohio. I lived in the top unit, so there's 2 units. I lived in the top unit, and then I rented out the bottom unit. And I can give you the numbers real quick. The mortgage was it's like $1,600 per month, and like all in, like PITI. And I was renting out the bottom for $1,250. So house hacking allowed me to live for like $300 or $400 per month, which is crazy to think about because I mean those prices are unheard of right now. So I was living very cheaply, and it's just like honestly one of the best ways you can build wealth as a young person just coming out of college. If you can save, $15,000, $20,000, $25,000 and get into your first house hack, the return on investment for a house hack is nearly infinity because it's just such a massive, you get a low down payment, but then you get a high return on investment, as well as tax benefits and depreciation and just a bunch of cool things from house hacking. So,
your numbers are actually almost identical to my house hack, right? So my mortgage payment's around $1,600, and I'm able to get $1,200 for the other unit. And so my all-in cost per housing is only $400 a month currently for my primary residence. And being able to reduce what is most people's largest expense every single month, which is what they spend on housing, you're able to build a good amount of wealth because now you're not shelling out 30-40% of your income somewhere else. You're able to bring your monthly spend down to, say, sub 10% in most cases, sub 10-15%. And it also fuels the catalyst for further real estate investing, because then you get the idea and you kind of see what it means to be a landlord and kind of collect rent and have to do repairs yourself. I know when I was running the numbers, at least on my deal, because I was able to put a little money down, my deal ended up being like 250% return per year when I was able to crunch the numbers and what it would look like when I do eventually move out and I rent out my side. Something like a 250% return on my money per year.
Yeah, it's insane, especially with the low down payment. And what I love about house hacking too is like it is you get into the real estate investing game and it's like on training wheels. You're investing, but if anything goes wrong with the property, like you live in the property, so it's not going to like burn down and you're going to be across the country or anything like that, And so it really helps the peace of mind when getting into real estate investing. You can learn some hands-on work like being a landlord and understanding to build those systems like we talked about earlier. It helps you understand what it's like to be a real estate investor and not just a property owner. So I would recommend house hacking to really anyone. Like you said, a 250% return. I feel like mine was pretty near that as well when you count in appreciation, cash flow, and all that. So it's just one of the best ways to build wealth, especially while you're young, and I would recommend it to anyone.
And for those out here interested in how you get a loan for that, if you are fresh out of college with 1 year of work experience, you will actually qualify for a loan using an FHA loan. And so you don't need to have 2 years of work experience, but if you're fresh out of college and you land a job in your field, you're able to have 1 year of work experience in order to qualify for a house. Was that your experience too? Or do they want 2 years or?
Yeah, so I was working for about a year and a half, but I ended up going a conventional loan. I might have had 2 years of working experience. I'm not sure, but I went a conventional 5% loan, just trying to either save my FHA loan or, at the time of buying, like people weren't really accepting FHA loans that much. So I ended up just going a 5% conventional loan. And because it was an owner occupied loan, because I was living in the property, they allowed me to put 5% down, which was really nice.
Yeah. Yeah, it's interesting you bring that up because if I could go back in time, I would actually do the conventional loan as opposed to the FHA. One of the big reasons why is, like you mentioned, there's FHA has different requirements to be able to get the deal done, and a lot of times sellers may not want to entertain an FHA offer. But more so, as importantly, is when you do reach 20% equity. See, when you have less than 20% equity in a property, you have to pay what's called PMI, or private mortgage insurance. And once you get 20% equity, that's supposed to fall off. Well, what I didn't know is that when you have an FHA loan, you have to hire an appraiser to come out, value your property, and then you have to refinance with the bank in order to drop the PMI, the private mortgage insurance. Well, with a conventional loan like John's with 5% down, is once that property hits 20% in equity, and all you have to do is send out the appraiser. The appraiser is going to say, hey, here's what the property's worth. And then the bank's going to say, okay, John, you have 20% equity in the property. You don't even have to refinance in order to drop the PMI. It'll actually just drop off automatically. And that could save somebody, $2,500 in closing costs just by doing that. So had I have gone back, and what I know now is I would have also done the conventional 5%.
Yeah. Yeah. And I think, the FHA loan is great. If you're a veteran as well, like the VA loan is good to get as well. But I think I will end up using potentially an FHA loan on my second property. It just kind of depends on what things are looking like. But I still say, like, even if you have to go FHA route, I mean, the fact that you're house hacking is still one of the best things to build wealth. So whether you get FHA or conventional, you're not going to lose in the end. So
I'm curious to hear this answer, and then we'll dive into a little bit of the tax stuff soon. Is what would you say is like your sort of investment allocation percentage? So for me, it's like, all right, let's say I'm making this much money per month. How much percent am I investing towards real estate? How much am I putting back into my business? And then how much am I investing in stocks or maybe my IRA? Do you have like a steadfast percentage that you personally use that you'd recommend, or what does that look like for you?
Yeah, it's definitely going to look different for everyone. And my fiance and I have talked about this a lot. It's like, well, okay, what do we want our income to go to mostly? Obviously, stocks and index funds are the most passive. You kind of just set it and forget it. You don't need to worry about it. But we feel like we could get more returns either through real estate investing, like house hacking, or by putting that into our business, into Johnny Finance as well. So I think right now we're putting probably, I don't even know if I could give you percentages, but I would guess like maybe 20% of our income goes to like stocks and just like passive stuff. That's really like a Roth IRA. Really, we're just maxing those out, and then we do have money being set aside for our next house hack. We want a house hack in a property together. So that would be real estate. That's maybe like 30 or 40%. And then the rest is going back into the business. We think, at least I think, that's a much better return on investments. I think we can really build the business up, whether it's, putting out digital products or offering coaching or monetizing through YouTube or sponsorships or whatever. I think the money spent on the business side is going to go a lot further than just getting like a 10% return on stocks. But I still advocate for the stock market for the majority of people. So
Right. We'll switch over to taxes. And I know like we've worked together and we've done like live events before where we talked about some strategies, and you were even on the live event that we did with the Phi couple a few weeks ago, teaching people real estate tax strategies, business tax strategies. What are some strategies that you've learned, whether it's retirement account investing, real estate strategies, or business strategies that you're most excited about implementing every single year in your business or your retirement accounts? What are some of those strategies that you like?
Yeah, I will say that talk with you and the Phi couple and Anna, that was phenomenal. I definitely learned a lot with you guys there, and it was completely free, which is it's crazy. It's like you guys just offer this information for free. It's like I could pay an accountant for like $200 an hour for consulting, or I could listen to you guys. So I think it was so much value provided in that. So I thank you guys for that. But I think one of the biggest lessons that I learned is just like the difference between tax planning and tax preparing. It's like it's definitely two different things, because tax planning is you're usually you do it in the summer where you're planning, okay, what can I do now? What can I spend now or save now to reduce my taxable income and reduce that liability. Whereas tax preparing is really kind of just getting all your documents together, making sure your W-9s are coming in and all that. So that was a big one for me, just the difference between the two. And you guys kind of spelled that out, which was awesome. But some of the strategies that I'm personally using, definitely, want to get the depreciation from my rental property, my duplex. I think that's a huge one. And another one I'm actually looking forward to, and I want to talk to you more about this, but using the solo 401k loan to buy more real estate. It definitely sounds like a no-brainer, and I'm going to try to explain it and let me know if something is off with it. But to my knowledge, that business owners can use a solo 401k. They can put money, I think it's up to $60,000 into this solo 401k, and they can get the tax write-off. They reduce their taxable income by putting money into it. But then on the backside, you can actually take a loan from your solo 401k. You take a loan from yourself, essentially, and you can use that loan to buy real estate. And so that's something I am heavily considering, because it's like, hey, I'm going to pay a lot of taxes as a business owner, but I also want to buy another rental property in the future. So maybe if I can lower my taxable income this year by putting a lot of money into a solo 401k, and then next year taking a loan from that money and buying a rental property, I mean, it kind of sounds too good to be true in my mind. So I'm just kind of like thinking through how to actually do that. So that's what I'm looking forward to in the future.
Yeah, no, we could definitely talk about that. That one's a very interesting and really in the weeds strategy. Now, the solo 401k, you hit it on the head. There is the business owner can get the tax deduction for the money that they put in. Now, you can do what's called self-directing your solo 401k, where your retirement account actually owns the real estate. The problem with that is now that the real estate is owned by your retirement account and not necessarily you, which means your losses from that rental property and the real estate that you're generating are not going to flow through to your other rental properties. And you're also going to have to buy it in a retirement account as opposed to your personal name, where you can get much more favorable financing and loans. And so it's something that I'm interested in, is being able to contribute to my solo 401k, and then next year or a year and a half later turn around and borrow against the value of that account. Now, as far as for some numbers here, you're able to borrow up to $50,000 from the plan, or 50% of the total value of the plan, whichever is greater. Right. So, if I have $80,000 in my plan, I'm able to borrow $40,000 against it. And now that I'm borrowing the money to myself, and what's interesting is you're actually paying interest back to your account. And the rate that you pay it at is typically at prime rate plus 1 or 2%. So it's like the interest that I am paying is just going back to myself anyway and making my account more money. And so it's a no-brainer to kind of go through the hassle of doing that. So it's a very interesting kind of strategy that I've developed, or I've taught people, piecing everything together, right? Learning about contributing to, first you have to understand what a solo 401k is, and then you have to understand that you can actually borrow against it. And then you have to understand that, you can self-direct your retirement account, but then it's not in your personal name, it's your retirement account that owns it. And putting everything together and coming up with a strategy that could work for somebody like you and I, who are business owners but also want to own rental properties, it's like the best of both worlds, putting those two together. So, John, another thing I wanted to ask is, as we're coming up on the end of 2022 and into 2023 with, everything that's going on in the last couple of years with the pandemic and this urge for financial independence and all these other things, what are you most excited about for 2023, whether it's you personally, as a business owner, as a real estate investor, what are you most excited about, or some of the projects that you're going to be working on in this coming year?
Yeah, I think there's a lot of things I get excited about, but trying to keep my focus on just a few is the tough thing. I feel like a lot of us have that shiny object syndrome where we like go from topic to topic. But I'm really trying to focus on just my content in general, creating a good community of people who like personal finance, like financial independence, and creating really good content that resonates with the audience. So that's, staying on TikTok, staying active on TikTok, but then also upgrading my YouTube. I feel like I've been slacking on my YouTube channel. So, especially with YouTube Shorts coming and, YouTube Shorts making a big play in that as well. But, just creating better and higher quality content, more quantity as well. I think that's what's really going to build the audience. And then, like I said before, that's what's going to drive the machine. That's what's going to I'm going to be able to get more sponsorships. I'm going to be able to get more affiliates. I'm going to be able to sell more digital products. I'm going to be able to buy more real estate because of that. So that's really what I'm focused on, is like nailing down my content machine. And I feel like everything can grow from there as well. So that's kind of what I'm most excited about. What about you? Do you think you're going to, just keep crushing the content and building your online CPA business?
Yeah, so one thing to touch on there is you mentioned the shiny object syndrome. Alex Hormozy also calls it the lady in the red dress, is another terminology where people use, where it's, hey, you see this thing going on over here where it might look like a quick way to make some money, but it's not really your primary objective or the task at hand. And so even for me, so I've even taken on some business consulting clients where I help them, build the brand, deliver value, create products. But it's really secondary to what I do as a real estate CPA and an investor. So it's almost like a lady in the red dress to me.
Yeah.
As far as what my goals in 2023 would be, to help as many people as possible, no matter what stage of the game that they are as a real estate investor. And so currently, for 2022, I really only have one sort of product or service offering, and that's one-on-one consulting and tax planning, versus I want to be able to offer that same sort of advice to the masses. And so no matter where you're at in your journey, I can help that. And I'm going to be able to do that by doing more live events, going to do workshops, come out with courses, free ebooks, etc. So that way I can really meet every single investor, no matter which stage of the game that they're at.
Yeah. And I totally resonate with that too, because it's like we want to help as many people as we can. And I think just making those digital products, whether it's a beginner accounting, write-off class, or or an advance, writing off some real estate investments. I think creating those courses and creating those digital products so like everyone can be helped at their disposal is really the way to go. And that's what I'm trying to like think about too, is like create a community, but also like give the people what the people want. If they want a budgeting template to help them budget better, I'm willing to give that to them. And so listening to my audience more and understanding that, building this community is like the thing that's going to drive everything else. So,
right. So one last thing off the top of your head, what is one piece of advice that you would give to a person just starting out investing?
Just starting out investing, definitely just play the long-term game. There's a quote that says, play long-term games with long-term people. I think you need to really consider like, who are you surrounding yourself with, one, but when it comes to investing, like just think about like, what can make you money in 10 years, not like 10 days, So it's the invest for decades, not invest for days kind of mindset. So that's what I preach, and that's what I, do in my own life. I'm investing in long-term, like assets, whether it's real estate, stocks, or index funds, and in my business as well. I feel like that's going to be around for a decade. So I'm just thinking about the long-term game, not getting caught up with the girl in the red dress or the shiny object syndrome. So I think that's the best piece of advice I can give to people, is just think long-term.
Right. It's awesome that you bring that up, because I just got done watching a video by Simon Sinek, and he talked about the long-term companies that play long-term games, they're able to outperform in the long run other companies that are just in it for a short-term profit. And I believe he used the example of like Amazon, right? So Amazon started off selling books and having a bookstore, and then eventually turned into this conglomerate where now they're selling basically everything. And hey, it's not, I'm going to order these shoes, I'm going to order it off Amazon, right? That's what everybody says now. And when I think about Amazon, like they were just playing a long-term game in a field where there's a lot of people that were short-term players, and they ended up becoming an extremely successful company that way.
Yeah, and even with AWS, I mean, they're still thinking like 10 years ahead with AWS and capturing data and all that stuff. So they're going to be around for the next decade, 100%. So.
Well, thanks so much again for your time today. It's been awesome. I'm sure the listeners got a lot of value out of this. If people wanted to get in touch with you and reach out and see what you're up to, where can they find you?
Yeah, I encourage them to check out my TikTok at John E Finance. That's John, the letter E, Finance. I'm on YouTube. I'm on Instagram, Twitter. And then you can also check out my website at John E Finance. So you can catch me anywhere there. And Ryan, thanks so much for having me on the podcast. It's been a pleasure. And I'm excited to see where we're going in 2023. So
thanks, John.
Thanks.
Thanks, guys, for tuning into the episode today. Again, if you want to find John, you could reach out to him at Johnny Finance on all social media platforms. And again, if you want to get in contact with me, it's going to be at Learn Like a CPA on all social media platforms.